Well, the United States government has avoided a complete financial disaster the past few years. And here are just a few of the tricks that they pulled out of their sleeve, like David Copperfield, a magician. Number one, printing trillions of dollars, artificially lowering interest rates, followed by rate hikes, and then selling off a lot of treasury bonds. Brilliant moves, but now we're seeing a breaking point via a commercial real estate crash. This is not speculation. It's unfolding right before our eyes. Federal Reserve Chair Jerome Powell warned, quote, "There will be bank failures," end quote, at the Senate Banking Committee in early March. So how did we get here? Well, the pandemic marked an important change in the United States workplace. The work from home revolution changed everything in the once profitable office space. So people would go to work, they go to offices, retailers would open offices and space all around there, coffee shops and everything else for people to have lunch and breaks and all of that. But then when no one shows up to those offices anymore, that whole economy collapses in these cities, right? Americans are no longer commuting to and from office spaces. The World Economic Forum, the likes of Klaus Schwab, don't want you to work in offices. Their dream, of course, is that you'll work from home. You will work at home. You will live in a 15-minute city. You will do all walking, ride your bike, and you will not leave that 15-minute zone. And the idea is you can get anywhere within 15 minutes by walking or riding your bike. And they don't want you to visit grandma 45 minutes away and using your carbon footprint to drive your vehicle there. So they love this. They absolutely loved what happened during the pandemic, and they want it to continue and repeat. Moody's analytics found that 19.6% of office spaces were not leased in the fourth quarter of 2023, up from 18% in 2022. Commercial leases usually have a 5 to 10 year lifespan, many of which are coming due this year and into 2025. It's estimated that nearly $1.5 trillion in commercial real estate loans are due for repayment by the end of next year. Can you imagine? This, combined with higher interest rates, has put immense pressure on leaseholders. And now we're seeing multiple businesses defaulting on their loans.
This is the biggest real estate crisis since 2008. A lot of office space around the world is now redundant. There's too much of it. And that's why we're seeing such massive value declines.
There's a building in Manhattan owned by Blackstone that's being marketed at a roughly 50% discount on the loan. Aon Center, the third tallest building in LA, sold in December for a 45% discount compared to what it sold for a decade earlier.
There's been Chinese developers run into trouble, and some of them have been threatened with the loss of their buildings as well. So this is happening around the world and will continue to happen.
Because interest rates are higher now than they were when their loans were originated 5 to 10 years ago, refinancing doesn't make a lot of sense, especially with the uncertainty in leasing. And there's no one coming into the office. See, it's a perfect storm. The office space is basically obsolete now. Gone are the Mad Men era of people coming into the city and commuting 2 hours. Even implementing a hybrid work model doesn't make sense for these leaseholders anymore. Due to declining values, defaulting loans in the commercial real estate space, smaller banks are feeling the pinch right now. Regional banks with a high percentage of commercial properties on their balance sheets are set to fail. Federal Reserve data from September of 2023 showed that commercial real estate comprised 44% of portfolios at small banks versus only 14% of the country's 25 big banks.
People at the Federal Reserve have been worried for at least 8 years about commercial real estate and the threat of a bubble. But in a way, it is the acceptable byproduct of the larger picture, which is to try and cure the economic woes from the financial crisis. Nothing really was done to prevent commercial real estate prices soaring.
There is so much volatility happening in the commercial and office space right now. And a lot of banks are holding debt on commercial office spaces. And an increasing number of commercial landlords are defaulting on their loans each month. Even some of the biggest names in the commercial real estate game, like Blackstone, have defaulted on commercial mortgages and have handed back the keys of their office buildings. Can you imagine? And if a big company like Blackstone can't make it, it's not looking good for anyone else. I know it's easy to disassociate from this problem entirely. Bank collapses can seem distant to the average American. But imagine if it's your bank and you go down to get your money out and find out that that bank is no longer there. So the truth is, when the entire systems like this collapse, the downstream effects are widespread. Generally speaking, your bank account is safe if it's protected by FDIC insurance, right? But stress on the banking system can trigger a recession and put a lot of pressure on smaller banks. And of course, when the little guys get gobbled up, the big banks become even more powerful. You know, the ones who are charging ridiculous interest rates on credit cards, luring Americans in to take advantage of their hardships? We'll get back to the video in a minute, but first, inflation is out of control and you've got to protect your money. Any money you've got sitting in your bank is losing value every day, right now by about 3.5% to 4%. That's right. If you want to protect your money and you want to grow it, you need to put it to work by investing it. Now, I'm not talking about risky or volatile investments like stocks or crypto. Don't get me wrong, I like those. But tangible assets is what I'm really talking about, that you can actually put your hands on. The best tangible asset that you can invest in right now is real estate. It's the #1 hedge against inflation, and it offers some of the highest and the safest returns possible. Hey everyone, I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. Now, I got into real estate after learning that it was a favorite among the wealthy, and now I know exactly why. Personal experience has proven that it is the #1 way to build wealth and to protect wealth. I've got decades of experience now that have proven it. Now, while there's several ways you can invest in real estate, most of which I've tried myself, the build-to-rent model offers the most benefits, hands down. More specifically, single family, buy and hold. I'm talking brand new construction built from the ground up, build to rent. Build to rent properties offer more tax benefits, fewer headaches than rehabbing an existing property. There's less risk and way less stress than flipping houses. There are a lot less work than wholesaling houses. And there's less turnover and fewer issues than multifamily properties. And when you invest in build to rent real estate, you're getting 4 streams of income. That's right, 4. Appreciation and equity gains, principal reduction, tax benefits and depreciation, and then monthly cash flow, which is my favorite. On top of that, you're using someone else's money, yes, the bank's money, to invest in real estate, while someone else, your tenant, is paying for it, paying down the mortgage. It's just one advantage that it has over tangible assets like gold and silver. I mean, I love gold and silver, but you can't buy it with the bank's money. And you certainly can't have someone else pay for it, can you? No, you can't. Plus, when you're strategic about leveraging, using the bank's money, you can get 4 to 5 times the assets that you can to invest in. And it's the only investment that gives you 4 to 5 times the protection from inflation. My company, Morris Invest, along with the help from our team at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks, because we buy and we build in bulk, and then we pass our savings on to you. Now, if you'd like to learn more, let's just jump on the phone. You can share your financial goals with my team. You can ask questions, it's totally free, and we'll see if it's a good fit. Talking with us, again, completely free. No pressure, no strings attached. When we talk to you on the phone, we're going to explain a few things. Number 1, how to identify a smart real estate investment. Then, what does it take to become a successful investor? And then what you need to get started, whether it's a team, good market, good property, down payment, financing, all of those things. We'll talk about it. Where to get a good strategy that actually best fits your goals and your situation. I mean, everyone is different, right? Every life situation is different. So we'll talk about that on the phone. Then we'll also talk about how to get free ongoing help. So click the link below right now to schedule a free call with my team and start protecting your money today. Not only are the banks failing, cities too are affected by commercial real estate and banks failing. The consequences will undoubtedly reach small local economies, potentially even worldwide. If you've been watching this channel for any amount of time, you know that I've been warning about the troubles in the commercial real estate space for months, if not years. Up until recently, commercial real estate was very dangerous unless you have a ton of capital and power. Now we're seeing those big names like Blackstone and BlackRock taking losses. So if you're looking for more education on how to grow and protect your wealth, I want you to check out the pinned comment below. I put together a playlist for you of videos that's full of great information on how to build your financial intelligence and preserve your wealth. I hope you watch it. And I hope you subscribe to this channel. It's totally free, and we'd love to see you in the next video. Thanks, everyone.